Hey everybody, it's Eric. Welcome back to the channel. Pre-market on this day, which was Wednesday the 18th, the alpha crunching forecast clearly had a bullish bias for the day. And so I'm going into the day for my 0DTE trades with kind of a bullish idea, but I really want to let the market open up and settle and then see if a bullish trend emerges. So let's talk through it and let me show you how I chose my strikes and how that trend emerged and how I got on the right side of the market on this day. So first of all, the forecast, this is the trading view integration. You can also see it on alphacrunching.com when you log in. Once you become a member, you can simply copy the data out of this and paste into the trading view indicator for the integration. That way you have it on your chart. So again, once the integration is on, I'm letting the market open up and we can see there's clearly a bearish trend happening. So at this point, I'm not really looking to get into a put credit spread or go long or anything because I want the trend to be in line with the forecast. And about mid-morning, this was around 11:30 or so mid-morning, the trend finally turned up. And at this point, now I'm interested in taking a put credit spread trade. So let me show you the entry and exit I got into. I think I entered on this particular candle. This was about 11:40. So I had to wait a long time. I mean, a lot of times if we just open kind of flat, the market will go, but this was a pretty big, ugly morning. But I got a 5 wide credit spread for $1 with SPX trading about 66.30. I ended up with the 65.95.90, which is down here. Let's loosely call it 660,600 support. So I was a little bit below that. So I felt pretty good about it. I entered in at $1 and my risk management was basically looking to get 50 to 75% of the credit. Because this trade is in the morning, if you will, I don't know that I want to hold it all day because the market's been pretty volatile. And if I can get 50 to 75% in an hour or so, I would just take it. From a stop loss perspective, I really don't want to lose more than twice the credit. So let's call it a 200% stop loss. And what that's going to do, if you think about it for a second, if you get a credit of $1, a 200% stop loss would be a debit of $3. In order for a 5 wide spread to become worth $3, really both strikes would have to go in the money. So that's loosely kind of the stop. If both strikes went into the money, I'm going to close this trade because I don't want to lose the entire spread in case we roll over and die or something. If we kind of let this play out a little bit more, as you'll see, I took a lot of heat on this, but we actually never breached the short strike, or we didn't go through it. So I did not get stopped out. I am working on bracket orders for this. So I was able to put a bracket order in that simply said, hey, if we hit $3, buy it back. That's my stop. If I can buy it back for 35 cents, which is about 65% of the profit, let's buy that back. And we did recover. We bounced back up here and you can see I got an exit of 35 cents. So that was kind of the entry and exit from my first trade. And then I was looking at potentially a fade trade because if you look at the forecast, it starts to peak around this time of day. And then there was a kind of an end of day fade. So now at this point, I'm looking for a sell signal. If I get a sell signal, then I may consider selling an out of the money call credit spread. And I might actually try to hold it to expiration because those afternoon trades, a lot of times you can get a trend in either direction. But if, as you see, we traded sideways, but the trend really never turned lower until really late in the day. We did get the fade. The forecast was, mostly spot on for the day. But I didn't get a technical sell signal until about 30 minutes before the close. And at that point, I wasn't really interested in doing that last because the credits are very low. So I ended up with just one trade on the day, again, based on the alpha crunching forecast. Let me know if you have any questions. We'll see you in the next video.